I read an article when maybe Vikas Khemani gave an interview to a newspaper which said that if indeed markets are so expensive, why aren't they correcting? And that's true, viewers, that markets aren't quite correcting. Now, Vikas, I want to ask you the contra question as well. Now that India has eclipsed China in the MSCI IMI weightage, and as per Morgan Stanley's note, very soon might eclipse China on the overall weightages as well. Could the converse happen, that everybody is saying that, oh, India might be expensive, or some people are saying, let's say that India might be expensive and therefore flows might be muted. Can the converse happen, that because of India's weightage, we might be surprised by the quantum of foreign flows that come in this easing cycle? Can that happen?
Absolutely. I think we will be surprised. We will have a deluge of money, and in fact, we will have an avalanche of money coming into Indian markets. Now whether timing and pace, I can't really. I mean, it could be 1 year, 2 year, 3 years, but the fact, just imagine, analyze. I mean, China is a one market where US investors aren't allocating. There's a huge this thing happening. Which is the large market where you can deploy billions and billions of dollars, with the confidence of growth coming around, and where you have the democracy, when you have the very solid corporate governance system, where you have the growth, where you have. So there's no market. If you ask me, I mean, yes, markets like Indonesia, but how much capital they can absorb? So point is that when money comes, India is a very, very, very large market. And fortunately, the size depth of market is increasing. One side, when people complain about a lot of IPOs and supply coming in, yes, this supply is essential for this absorption of this money which is going to come in. And that is a happy news. That's not a bad news. And the glimpse of this you can see when Japanese economic miracle played out. Lots of investors flocked to Japan. Between 1965 to 1989 was a bull market for Japan, and initially lots of skepticism was there, but towards the end, in late 70s, late 80s, there was no investor, globally, who was not going towards Japan despite being expensive. And Japan, mind you, peaked at 60 times Nikkei. P of Nikkei in 1989. So I think, I'm not making a point that what PE it will trade in Indian markets will trade, but the point I'm directionally trying to tell you, that when the money comes in, it just sort of is an allocation money. It finds way to a market, and I do believe that. And by the way, one data also one must keep in mind: US as a percentage of the world market cap today is 61%. Last time it peaked at 51%. So how much more money US can absorb, and the fact that the rate cut cycle is beginning, there's also case can be made out that US economy will be soft. Hence, you might not have the same kind of sort of equity story going forward there. So there aren't many equity markets with a good story going around the globe, and hence I see that we all will keep getting surprised with the amount of money flow which will come both from domestics as well as foreigners.